Trading was so hard in the beginning because I was only looking for trends. I only heard people talking about the trend, how good the trend is. Trend is your friend. And that's true, trend is your friend. However, every time that I entered a trade, the trend switched on me and I lost a bunch of money. Until I found a little secret about these markets. It's actually the easy method to know when exactly will this trend switch and how to actually move with the trend correctly and make a ton of money. And this turned me profitable. I have been trading for over 3 years, but once I found this method in the markets, it happens every single day, I turned profitable. I have been profitable for over 1 year. And now it's time for me to teach it to you. This will change your life, but only if you stay focused. Say to your brain right now that I will focus till the end of this video until I master it and turn profitable. So here is the secret. The first step is to actually understand what is a trend. Because obviously to master the trends, we have to know what is a trend in the first place. So here it is. What is a trend? Trend is a continuous movement to the upside or downside. And the markets always move in a trend. Price never moves straightly up or down. It always have to move like this. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. In an uptrend. In a downtrend, it moves like this. Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Now, why do trends need to move like that? For example, we had a big economic news which caused the price move to the upside real quick. Now, the thing here is, why does it need to fix itself? Because when it moves straightly up or down, it leaves us imbalances. It has to fix it because that's how the trend moves. That's how the price moves. And in the middle is the imbalance. That's why the price has to always fix itself. And here's the imbalance again. It fixes itself. Okay? That's how the trend moves. And that is exactly the same in downtrends. Moves like this, fixes itself, fills out the imbalances, because in those imbalances, there are millions of orders that these banks, institutions, and even hedge funds need to fill. Because those are actually the ones that move the market. And once they're happy, they can continue the trend to the place where it was going in the first place. Now you may wonder, what about the 80% of the time when the price actually moves sideways, which is called consolidation, when the price moves exactly like sideways. Super awful price action, it just consolidates like this, doesn't know where to go. That is when there are equal amounts of buy and sell orders. Literally, they are competing against each other. It doesn't know where to go. But then when the trend actually starts moving, then it will continue there. And that's how the trend has to move. Now, as you can see right here, this is the exact same thing that I talked about. It moves like this right here. But what happens? It actually broke structure to the upside right here. Broke structure to the upside. This fat part of the candle closed above it, which caused us to continue the trend. And now it does the same thing. Until what? Continues, and now it does the same thing. Why? Well, first of all, if we look closely, it's literally night. The markets are not open here. The New York Stock Exchange opens 9:30 a.m. Eastern Time. And that is exactly when there's the most movement in the US 500 or ES for the people who trade the futures. However, also pre-markets give volume to the markets. That's why you see the price moving pretty nicely. There's lots of volume, the price is super active, but that's how always the price moves. Like I told you guys, in an uptrend, it moves like this, higher highs, higher lows. It has to fix itself right here. On a downtrend, lower lows, lower highs. That's the basics. And when it consolidates, which is most of the time, which is pretty annoying, it just moves sideways, and that is exactly when you should not enter until you get the movement. However, now that we know the basics of the trend, how does the trend moves, it's time to reveal the real meat of this video. Pause, what the fuck? You came for this video because you want to understand the trends. How can you actually follow the trend, and how can you actually know when will the trend switch? Pay close attention. This is the method. Now that we know that the trend moves always like this, higher highs, higher lows, lower highs, in a trend, literally. Now, when will the trend switch? Literally, when we have higher time frame liquidity. Liquidity sweeps are what moves the market. Liquidity sweeps are the meat of all the building blocks. Liquidity, literally these banks, institutions, and hedge funds, they are literally going towards liquidity. Liquidity has millions of sell and buy orders. People are getting into the markets and getting out from the markets. These market movers are going towards liquidity to take out people out from the market to fill millions of orders. And liquidity sweeps are what actually switches the bias, switches the trend, especially if it's a really hard time frame liquidity, because always hard time frame holds more power. That's how it goes. Now, in this case, this is liquidity. This is the trend. When the trend goes above and sweeps out liquidity, hard time frame liquidity, in this case, we wouldn't immediately put short positions right here. No. First of all, after the liquidity sweep, we want to see reaction. Rejection, candle rejection, not a closure above it. Candle rejection goes like this. And then if we see break of structure on the lower time frames, we can enter and the trend will switch. I know you probably didn't understand, so let me show you guys in the charts. Now, if you look at this beauty, look at this chart. Beautiful downtrend, right? Beautiful downtrend. Like I told you, lower lows, lower highs in a downtrend. This is hard time frame. As you can see, this is the 4-hour time frame. This time frame holds a lot of power. What happens? It switches the trend. But what caused this trend to move? If you look closely, what is this? This is clear liquidity that got swept. If we go to the lower time frame, we can literally see how powerful this liquidity is. Look how powerful this liquidity is. It's just there. The liquidity is laying here. Millions of buy and sell orders are in this spot. Millions. Once it got swept, these banks and institutions are clearly happy. Because what do we get? Obviously, like I told you, it got swept. I wouldn't immediately enter from here. However, what happened? Rejection of the candle. We can see the smaller part of the candle immediately rejects from it. That's one good sign. What then? We see if we go to a lower time frame. If we now move down to the lower time frame, we could even go to the 5-minute time frame, because this is like a super high time frame liquidity that got swept. This was a super high time frame liquidity that got swept. And obviously, like I told you, higher time frame liquidities always hold more power, and it got the rejection. What happens here, guys? What happens here? If you look closely, this on the 5-minute time frame, this is a break of structure to the upside. This is the most recent high. This is a candle closer, fat part of the candle closing above the high immediately. That's a perfect reaction from the higher time frame liquidity. And right here, what happens, guys? The trend switches beautifully. And where would I put my stop loss? Below this black candle, because this is the most recent bullish order block. And this, the trend has switched, guys. And did you see how beautifully that was aligned? Sweep and immediate reaction, trend has switched officially. Now that is the perfect example of a bearish trend forming to a bullish trend. As you can see, it switched because we had the higher time frame liquidity, which caused that, and we got the rejection and break of structure on the lower time frame. That is the switch. Now you need to know, how can we follow the trend? Because let's say you missed this, you were sleeping or something, you missed this. The trend is still going. It's still going until there's a higher time frame liquidity, but it's still going. Now you need to know, when can I enter to follow the trend precisely? Now, do you remember when I told you guys that the trend always moves in a higher highs, higher lows, and obviously there's the consolidation where you shouldn't necessarily take a trade. But when the price is in a clear trend, for example bullish or bearish, that is exactly when you can look for trades. But how? Use the imbalances as your advantage. Like I told you, let's say the price is just continuing up. What does it always leave behind at some point? Gaps in the markets, fair value gaps. Fair value gaps are the gaps because the price has to fix itself. Once it gets to those gaps, big gaps, then here you have to see rejection, and then you can re-enter. The price will continue, and it literally will continue the trend until it switches, for example, from a liquidity sweep, like I told you. And here's the same thing. And here's the gap, retest, and you re-enter. Here's the gap, retest, and you re-enter. That's how the money is made in these markets. Now, let me show you a good example. Right here, what do we have, guys? What is this? This is an imbalance in the markets. You can literally see this shit. You have to mark it like this, from here to here. Don't worry guys, if you don't know exactly how to spot fair value gaps, imbalances in the markets, I have the exact perfect video for you in my channel, but watch this video first and then you can go watch that. So here's the fair value gap. As you can see, it gets hit, and right here it gets completely filled. What do we see? Filled, rejection, and then here's the consolidation. You do not want to enter when there's consolidation, right? But here, complete fill of the imbalance, and right here, rejection, right? If we go to the lower time frames, what do we see? Break of structure right here. This was the most recent high. This was the fat candle closing above it. Right here, you can continue the trend. Stop loss below this bullish order block. And where would I put my take profit in? In this liquidity area. Because like I told you guys, liquidity sweeps are what move the market. Obviously, these banks, institutions, and hedge funds, those who have the money, move the market. But they are going towards the liquidity, towards the imbalances. And once those get hit, then you can do whatever. Okay? You just have to understand that. I have been trading for over 3 years. I've been in these markets for a long time. And I literally start to see how these move. And this shit happens every single day. Use the higher time frames to see the trend. Use the lower time frame to see the entry. Market intuition, really important. Make sure to comment down below what you thought about this video. Did you learn? And join the free trading community Discord from the description and take your trading to the next level. And as usual, I will see you on the other side.